Welcome to Endgame Finance. Today, guys, we're talking about Rivian again. And in the recent interview with RJ Scaringe, Rivian founder and CEO, he says there's so much demand for their vehicles, they might actually buck the trend and actually raise prices on their vehicles. Meanwhile, everyone else has been slashing prices drastically. That includes Tesla, that includes Volkswagen, that pretty much includes everyone. Ford Lightning F-150 was down. They reduced the prices by thousands of dollars. However, it's a completely different story with Rivian. Rivian is actually considering raising prices because there's so much demand. Rivian CEO hinted leasing options that will unlock the $7,500 credit. That is the federal credit that the federal government grants purchasers of EVs to lower their tax bill if they buy an electric vehicle. RJ Scaringe said it's frustrating to see R1T and R1S owners sell their vehicles after 1 month to make a profit. Basically, there's such huge demand for R1 vehicles that once people buy them, they can resell them at a much higher price. And this indicates that Rivian can actually raise prices of their trucks and still sell them at a huge volume. Scaringe said that Rivian didn't offer leasing on purpose because it was confident that vehicles R1S and R1T would have good residual value, which led to a situation where owners sold their EVs just 1 month after ownership to make a profit. The price of slightly used R1S and R1Ts might be higher than the brand new vehicle, and RJ Scaringe is really upset about this, and that's why he is considering offering leasing right now. So many more buyers will have this vehicle, and once it's leased, it's much more difficult to resell because it is on a lease. So as we're saying, demand is much higher than the supply, so new builds might see higher MSRPs. This isn't the first time Scaringe distanced himself from the price-cutting strategy employed by other car makers. So as a result of all this massive demand and all this reselling that's taking price, Rivian will probably start offering leasing options. Although the timeline has not been established, the automaker head honcho is saying that it's very valuable for them to unlock leasing, and that Rivian market-leading residuals will lead to exponentially strong leasing packages. Basically, he's just reiterating there's so much demand for the vehicle. If they lease it, it will increase that backlog even more. And you really want that backlog to be increased as much as possible, because if you have hundreds of thousands of back orders, you see which are the most beneficial, which are the most profitable for you to build. You build those out first. It basically bumps up your margins even more. And this is extremely helpful to a brand new startup company that's still looking to turn a profit. And if they have this backlog, and if this backlog is filled with high profit vehicles that are waiting to be built, it's all a good combination that leads them very quickly towards profitability. Furthermore, Rivian will enable customers to benefit from the $7,500 IRA tax credit offered for lease deals, seeing as R1T and R1S only qualify for $3,750 currently. Federal credit for $7,500 actually works for leasing. It makes sense for them even more to offer this option to customers, because customers will save thousands of dollars in buying these vehicles. And instead of cutting actually prices, the government is subsidizing those price cuts technically. So Rivian demand continues to increase, their backlog continues to increase, and everything is going in the right direction for this company. So during the same conference where RJ was doing his interviews, he said he's very optimistic about the R2 platform, which will underpin a series of smaller all-electric vehicles that will be built in Georgia, Atlanta. Regarding the second factory, CEO explained that the grading process is almost complete and that the building will start early next year. So this company is almost prepared to have the machinery brought in. Once the machinery has been brought in, these guys will logistically position and set everything up with their suppliers, and the build-out will start. So we may actually see R2 platform coming online and pushing out units fairly soon, even quicker than 2026 that was predicted, maybe even sometime in 2025. A few more points from this interview with RJ. He says there's 3 main objectives here. Biggest objective that Rivian wants to maintain is their brand image. Can Rivian build what consumers want? And they can. with R1 brand resonance has been very strong. There's been such a huge positive reception of the Rivian brand that Rivian and RJ have really established Rivian as a global luxury premium brand. That was their primary objective, and they accomplished it fairly well. Second main objective was for Rivian to overcome the production difficulties they were facing, and they've actually done that. They have renegotiated all their suppliers. They've actually started to build out a large portion of parts on themselves, by themselves. The Enduro motor, their batteries will in part be built by them as well. Software is being built by Rivian, so complete vertical integration that gives them absolute control over quality and production. Third main objective was, can Rivian grow? And yes, they can. We see this with a huge demand where Rivian actually might increase their prices because there's so much demand. And this doesn't even take into the account the R2 platform that's coming online. There's going to be at least 5 to 10x more people buying R2s just because they will be priced a lot lower than R1 platform. And there's so much demand for the electric delivery vans. Once they deliver everything they're contractually obligated to Amazon, everyone else will want these vans. USPS, UPS, FedEx, everyone will want a cheaper vehicle. It's much easier to maintain, and it's much more green, and it's positive for the environment overall. Lastly, what RJ really touched upon is this vertical integration of software. Other than Tesla, Rivian is the only one that designs their software and their computers by themselves, allowing full integration of hardware and software. And Rivian is saying they will save thousands of dollars in the upcoming quarters just because they've integrated this so well. So they will reduce the production costs even further by even thousands of dollars more that they already have. So everything is really pointing towards profitability for Rivian in the next upcoming quarters. Every other traditional automaker except for Tesla, everyone else is using multiple vendors. They're using multiple suppliers to supply their software and hardware, and all of that doesn't really come together. All of that is just a huge amount of parts that are just sort of stuck in and connected by force. So there's really no seamless integration that Rivian will offer with their computers, their software. So really, in the near term, cost lowering, the main drivers will be consolidation of these computers, of software and hardware. Multiple thousands of dollars will be saved per vehicle just because they're integrating this hardware and software so seamlessly, and the computers that are on board the R1S and R1T are actually being produced by them. So there will be thousands of dollars in savings. And they're also over-optimizing their plant, the plant in Normal, Illinois that's producing their vehicles right now. They're slashing costs drastically just because they've increased production. They found excess waste. They found things that work, things that don't work. They've optimized for all of that. So that will also save thousands of dollars in production costs. All of this was very, very painful for Rivian, just like as it was painful for Elon Musk's Tesla. This is the production hell that Elon Musk was really talking about and really reiterating with every single electric vehicle maker that came online. He always says that prototypes are easy, production is difficult, especially the beginning of the production, setting up these lines. Majority, 90% of electric vehicle makers will go bankrupt in the near future just because of this production hell that comes on initially. And Rivian has really overcome this. They've conquered this production hell, and they've come out much better, much stronger, much leaner for it. So that's it, guys. Rivian is really, really doing well. They're reducing costs, they're increasing profitability, their demand is off the hook. So everything is looking positive. And I'm very, very bullish on this company. I remain a shareholder for the indefinite future just because I see all green flags on the horizon. If you guys have any questions, comments, or concerns, let me know below. Guys, subscribe, like, and share. And as always, have a great day.